Welcome to Money Talks, the ultimate financial news upload, where knowledge meets empowerment. Join the money getter duo, CC and Cecil B, as we unravel the mysteries of finance Monday through Friday at 8 p.m. From the latest in fintech, cryptocurrencies, real estate, electric vehicles, IPOs, and Wall Street, to the rise of robotics and AI, we cover it all. So tune in as we share in the spotlight on how Black entertainers and creators alike are shaping finance and tackling IPOs, giving you the information you need to thrive in today's economy. This is Money Talks. Good evening. Today is Monday, April 16th, and you're watching Money Talks. I'm your host, Cecil B. Money Getter, and first up this evening in technology news, from caution to confidence, how long-term investors win big in turbulent times. Investor confidence is unraveling at a pace not seen in years, with recession odds climbing, U.S. equity allocations collapsing, and cash power swelling, seemingly one of the most bearish market outlooks in the quarter century. In a note shared Tuesday, Bank of America's Michael Hartnett said April's Well Before Managers survey revealed the fifth most bearish sentiment recorded in 25 years, with global growth expectations at 30-year lows and fears of a trade war-induced recession surging. The market narrative has flipped sharply from optimism to caution. The current level of sentiment is the fifth lowest on record, behind 2001, 2009, 2019, and 2022, Hartnett wrote. The survey, which gathers responses from hundreds of well before managers overseeing trillions in assets, shows net 82% of respondents expect the global economy to weaken over the next 12 months. The highest level since the survey began. This marks a dramatic deterioration from March, when only 44% held a negative growth outlook. Recession fears are also spiking, with 42% predicting a global recession, up from 19% in March. The probability of a hard landing, where economic contraction is abrupt and damaging, jumped to 49%, more than 4 times the 11% reported just a month earlier. Tax levels, a proxy for investor nervousness, surged to 4.8%, up 125 basis points since February, the sharpest 2-month rise since April of 2020, when the pandemic began. Survey shows a seismic shift in sentiment toward U.S. markets. Allocation to U.S. equity fell by 53 percentage points since February, the largest 2-month decline on record. This pushed net underweight exposure to 36%, the lowest since May of 2023. A striking 73% of investors said the era of U.S. exceptionalism has peaked, referring to the belief that the U.S. economy and markets could outperform the rest of the world. Correspondingly, expectations for the U.S. dollar to depreciate hit their worst level since 2006, with 61% expecting further weakness. Investor outlook on U.S. corporate earnings turned bleak as well. Net 28% said U.S. profit expectations are negative, the most pessimistic read since November of 2007, just before the global financial crisis. Give in the comments and let me know what you're thinking and how you feel. And next up, in fintech news, digital banking 2025's top trends shaping the future of finance. As more consumers embrace mobile apps and digital wallets, traditional banking with in-person visits and waiting in long lines is gradually becoming a thing of the past. Over the past few years, we've witnessed a fundamental shift in how people manage their money. In 2024, over 60% of banking customers in the US and Canada said that it's their desire to be able to complete any banking task via a mobile app. This isn't just a trend, it's a new norm. McKinsey's reports also show that between 2020 and 2023, the share of consumers using mobile banking globally jumped by 18%, reaching 57%. Digital banking is no longer an option, it's an expectation. And as we go through 2025, the digital banking landscape is poised for even more change. But with new opportunities come new challenges. The question is, are banks truly ready for this transformation? Let's start with what's changing. Digital banking today is about more than just offering a mobile app. It's about creating seamless, real-time experiences that meet evolving consumer needs and preferences. Artificial intelligence and machine learning are at the core of this evolution. Banks are increasingly exploring ways to use AI to personalize customer journeys and get ahead of their desires with tailored advice. At the same time, AI has a prominent part to play in security and operation efficiency, helping streamline many internal processes and detect fraud much faster and with greater precision than humans can manage manually. Soon enough, AI won't be just an add-on tool anymore. It will be just a normal part of the user experience. Then there's the shift toward real-time banking. Consumers these days don't want to wait. Whether it's payments, account updates, or financial advice, the demand for immediacy and access to 24/7 service is shaping how banks must shape their systems and approaches. This also ties in with the previous point about AI. Automating a lot of their workflows helps banks become faster in their responses so that they can satisfy customers better. And at the same time, automation allows banks themselves to scale faster by cutting costs, reducing the likelihood of errors, and allowing human workers to focus on more strategic, high-value tasks. Lastly, and perhaps most importantly, we're seeing a growing number of partnerships between banks and fintech companies. For a long time, the two sides have been competitors, but by now, the smartest banks have already realized that they don't have to waste time building all the innovative solutions themselves. If they can just build bridges with fintechs, they can get access to those products far more easily, and that in turn will allow them to retain their value in the rapidly digesting financial environment. Get in the comments and let me know what you think and how you feel.
You just finished an episode of Money Talks. Let me know how you're feeling in the comments below, and make sure to check out our other YouTube channel, 734 Listening Library for self-help books and shorts. See you at the top. Holla!